Andy, we finally got this tech shit working. How are you?
I'm great, Peter. Haven't had to spend a half an hour, troubleshooting before, but we're on, and it's awesome to be with you. Really looking forward to this.
Well, it's long overdue. We were meant to do it a long time ago, and we're going to do this again because I do want to talk about the topic of your book, but we got something a little bit more pressing to get into because Michael Saylor has been doing what Michael Saylor does and turning upside down the world of Bitcoin. And I didn't realize when that happened, like somebody at point, and maybe Preston tweeted it out, like a few people were like, yep, this is what Andy said. Andy predicted this. Andy said this can happen. So I want to go into this, but you know what my show is like. I'm going to want to keep it simple. I want you to explain all the concepts that people don't understand. But take me back, because you kind of like, you had this idea. You kind of had this concept of something they could do. Where did that come from?
Yeah, I mean, look, I think it came from personal experience, right? I'm no smarter than anyone else out there, but I started my career on the high yield bond desk at Goldman Sachs. And the convertible bond desk, by the way, sat right next to mine. So it was like, 10 of us on the trading desk effectively with offices around, and then the convert guys were nearby. But so I started in corporate finance, and I'm familiar with that market, and it just, the idea popped into my head because everyone was saying, oh, this is such an aggressive move. Can't believe he's spending all his balance sheet cash on Bitcoin. And then I was thinking, yeah, but the company has no debt. So like, why not come over the top, issue some debt and buy even more Bitcoin? And as it turned out, that's the way it happened. Now, the sort of the example that I tweeted out and that I talked about on the Swan Signal episode with Preston was just a straight up high yield bond deal. And the framework or the idea I just put out there was, what if they did a couple $100 million, they borrowed a couple $100 million in the bond market, maybe a 5% interest rate, that would be $10 million of annual interest expense, which they could easily cover because they've got, 30 to 50 million of free cash flow. And so as it turned out, they went to the convertible bond market and they did a much larger deal. So I'm happy to go into the details. I mean, I'll turn it back to you for the moment, but yeah, lots to say about that.
Okay, so me as somebody who doesn't understand this stuff, I would say, okay, the only flaw in this strategy is if Bitcoin price doesn't go up. If the Bitcoin price halved, they would still owe 200 million plus the interest. Say it was 400 million. They don't. So that's kind of risky. What happens at the end of the period of the bond? They would be due a 200 million debt, and they wouldn't be able to pay it.
Yeah, and let's talk about the structure a little bit because I think it's useful and interesting. So standard maturity in the convertible bond market is 5 years, and that's the deal they did. So they did a 5-year maturity. Now, it's interesting that that's the standard because that's very convenient, in my opinion, if you're buying Bitcoin. What's interesting about 5 years? Exactly. You get through a halving, and not only that, but it's, we're right in that sweet spot of the cycle, having just come through the halving. As you know well, usually that results in a massive bull market in the next 12 to 18 months. So yeah, he has bought himself, a full halving plus hopefully the bear market, this round and the next round. So, my original thought was that they would do an even longer maturity, which would be standard if it had been, just a standard bond deal rather than a convertible deal. But I think the 5-year maturity sets them up really nicely, exactly, to capture this bull market and possibly the next one. But to your point about, how can this go wrong? Yeah, of course. If Bitcoin doesn't perform, this is problematic potentially. But remember, so one thing about the convertible bond market, and we can get into the structure if you'd like, is because there's an equity component to investors, right? You get the debt component. The debt is usually more than half of the total value. So if you think about a convertible bond, $100 convertible bond is maybe like 70% debt and 30% equity effectively because there's an embedded stock call option. Well,
right, hold on, right. Look, we're gonna have to go through this because you're talking about things like I know it. Let's go step by step and then like real step by step. Okay.
Sure.
So when you say it's part equity, part debt, explain what's going on there. So say it's for just let's go with let's say it was 100 million just for the sake of this.
Yeah.
70% is debt, so they owe 70 million back, and what 30 is converted into equity.
Yeah, 30 has the option to convert into equity. So how it actually works as an investor. Let's say I'm an investor. I'm saying, okay,
Yeah.
Michael Saylor wants to raise money. Do I want to write him a check or do I not want to write him a check? How do I think about the instrument that I get for the cash that I'm giving him?
Mm-hmm.
Well, I get a bond, okay, and it has a maturity, and the bond is senior to the stock. So if it all goes belly up, then the equity gets paid after the debt. So I have a debt claim that gets paid first in bankruptcy, right before the equity. So that's item one. The equity piece is actually in the form of a call option. And they did a pretty standard strategy, which is the embedded call option is based on a higher stock price. So it only becomes valuable if the stock goes up by at least 37%. This is common in the convertible bond market. The idea is, well, if the stock doesn't go up, then you're just going to get your money back. You lend them the money, you got paid your interest along the way, then it matures and you get your money back. And it doesn't work out that great because the interest rate tends to be pretty low on these things. So the way things work out well as an investor in a convertible bond is if the stock goes up by a lot, then you get some participation in that upside. And as
you can make the choice to claim that.
Exactly. You can make this, and that's literally the conversion option. And the way the math works is if the stock doesn't go up, then you don't convert and you just, get your principal back at maturity of the bond. But if the stock does go up enough, then you convert into shares and you make more money.
But what if the stock doesn't go up and they can't pay back the loan?
Yeah, well, then you're in a bankruptcy or at minimum you're in a default situation, right? So so there's two ways that can work, as I think you alluded to. The one is, can they even cover the interest expense, right? In other words, it's like, are you making enough income to pay your mortgage, right? To pay that monthly interest. Okay. Now, the good news for MicroStrategy about the way they've structured this is the interest rate is under 1%, right? It's 0.75%. So even on the $550 million deal that they did, they announced 400, then they upsized to 550, and there's an option for investors to fund another 100 million. Even at those numbers, you're only talking about a few $1,000,000 annually in interest. The company generates at least 30 million of cash flow, so that's easy to cover the interest. But you asked the right question, which is, but what if they can't pay it back in 5 years when it matures? Now, I would argue that 5 years of free cash flow, 5 times 30 million is at least 150 million, probably more, but that likely won't cover the maturity because it's hundreds of millions depending on the ultimate size of the deal. Now, there are some features in the bond. There's a call feature, there's a put feature. These are complications and they're not fully disclosed, but I'll leave it there.
Well, so this, to me, this looks like a moonshot, right? This is, okay, I put $450 million already in of MicroStrategy money. I've put whatever it was of his own, a couple hundred million, and then another 50 million. Right? I have absolute conviction and personal belief, but we just don't know. Yes, we all believe every halving cycle is like the last one, it will grow, and it's certainly the indications are great, but we still don't know. Because one of the things that's going to happen over the next probably cycle is the realization of what this is from the state. Yes, the state already realizes there's certain growing desire for regulation. We've seen that in the US. We don't think it'll be banned, but let's just, hypothetically speaking, let's just, for the sake, let's game this out. Let's just say there are regulatory issues. Let's say there is some big regulatory issue, and say the price crashes. Just say for some reason the price is $14,000. The only way they can pay off this debt, unless MicroStrategy as a business has outperformed, they would have to sell Bitcoin to pay off the debt, right?
Yeah, I think it's fair to say that. And by the way, it's funny that you say the price crashes to 14K. That doesn't qualify as a price crash to me. But But yeah, if the price of Bitcoin goes down, I would agree that as structured, they're not likely to have generated enough cash flow to pay down the debt. Now, let me. I think this is crucial. It's actually one of the topics that I cover in my book, but I'll try to keep it short.
Yeah.
There's this economist named Hyman Minsky who was completely unknown, until the global financial crisis. And he had a framework which talked about debt. And he talked about hedge debt, 3 categories: hedge debt, speculative debt, Ponzi debt. Okay. Hedge debt, by his definition, is the kind of debt that you can pay off just generating cash flow before the maturity of the debt. So this type of debt doesn't qualify, right? There's not enough cash flow. The second category of debt assumes that you can refinance later. I would argue that even if Bitcoin underperforms, I'm assuming it doesn't go to zero, but let's say it underperforms, the price goes down. I would argue that MicroStrategy still has a business intelligence software, recurring revenue business that is financeable. This is a real business. It generates cash flow on a recurring basis. It may not be growing much, but it's still there, and it's still a pretty decent business. So somebody will lend MicroStrategy money when this thing matures, I would argue, on the basis of the cash generating power of the business itself.
Right. Okay. So they would likely get out of that situation, because the other thing is, when it matures, so say it's matures in 5 years, the way they're possibly going to have to pay off the debt is, unless they've generated a huge amount of cash to cover it, they'd likely have to sell out of part of the Bitcoin position.
Yes, agreed.
Yeah. So
if they can't get financed, right? If nobody will lend the money to refinance.
Well, because the other situation is that they refinance it based on them owning a huge amount of Bitcoin and being quite trusted. And we don't actually know the situation of the dollar at that point.
That's true.
We don't know that.
That's true.
But it does feel like a moonshot.
Look, I agree. I mean, he has made it very clear that he is a Bitcoin bull, and that he's willing to bet the company on it, because he came out with the news that he was going to buy Bitcoin. Then he did the tender offer to take out the shareholders that didn't want to be involved in this. Then he came over the top, right, and bought more Bitcoin. And now he's coming again, raising debt plus equity to buy even more, and then upsizing the deal. So yeah, there's no question. I mean, he's all in. He believes in this thing.
And one of the interesting things is he is sending a message to other companies about things they should do, could do, and could consider. He's close to already even doubled the original investment. So he's sending a message to the market. Oh, by the way, that $425 million we put in is now worth $750 million or whatever. We just did that in 3 months. A lot of other companies must be looking, going, holy shit. And now he's showing this alternative strategy of raising money to put more into Bitcoin. Like, to be the first to do it, to incentivize a number of other companies to at least consider this, I think it's a calculated moonshot.
Oh, absolutely. He started the clock. It's no accident that he has been on your show, 2 episodes, I think you did, right? And he's been all over the podcast. He's been going on, the basically mainstream media, doing conference appearances. I mean, it's, he's all over the place promoting it. And even just to underscore his confidence here, what you said is absolutely correct. The 2 initial purchases that he made are already very profitable because price has gone up. But his last purchase was over 19K, right? The last purchase was, I think, 50 million.
Yeah, it's just a small amount.
It's just a small amount, but what he's telling you is like, look, whatever price I'm paying, like whether it was 11, or 11 and a half or 19, this thing is still cheap. I'm going to keep, plowing money into this thing. I'm going to raise money to buy more. Yeah, he's moving hard into this thing, no question. And he doesn't seem too price sensitive, right? He seems like he's going to bid, he's going to pay whatever the market is offering him. And I don't know what his, maximum purchase price is. Maybe we'll find out.
He's a multi-million-dollar cost averaging. He is.
I like that.
He is going for it. All right, so listen, a couple of things that stood out to me. Okay, firstly, when it first was announced, the 400 million, I saw some of the commentary of expected interest rate, and then within 48 hours, it was upsized to $550 million, the interest rate of 0.75%, which surprised some people. And also the fact that it's essentially oversubscribed, which says to me a couple of things, and I'm way out of my depth here, but the deal was pretty much done, or the majority of the deal was pretty much done in advance. So it kind of had me thinking two things. It sounds like there's somebody who wants to invest in Bitcoin, can't traditionally, therefore this is a vehicle for them to do it. The whole MicroStrategy is an ETF thing. So we'll come to that. Let's go back a step. Some people listening will have heard about ETFs, but won't really know what they are. Just explain what an ETF is.
Sure. ETF stands for Exchange Traded Fund. And in the world of financial markets, it's somewhat new. I mean, I think that structure is only about 20 years old. And what it does is, it used to be that if an investor wanted a diversified portfolio of assets, let's say stocks, they could either buy them individually, right? And they would pay a commission to buy each one of those stocks, right? You want to buy some Netflix stock, you want to buy some Apple stock, you want to buy some IBM, you got to do each of those trades. So the solution to that was the mutual fund, which is, 60 years old or something. But there are problems with mutual funds. Mutual funds only settle transactions with the investors at the end of the day. So if you want to invest in a mutual fund, you buy it at the end of the day based on the assets that are in the fund, and you can't get in and out over the course of a day. You can't trade in and out. The ETF solved this problem. So the ETF is similar to a mutual fund. It owns a basket of assets generally, although not all do. The gold ETF, right, just owns gold, and we'll get to Bitcoin. But it creates this fund vehicle whereby you can sell or buy over the course of the trading day rather than just getting in after hours, basically based on the net asset value of the fund at one point of the day. I'd say that's the main thing.
Right, okay. So, but the ETF allows certain companies to invest in Bitcoin who can't go out and just buy the asset. Why is that? What is that scenario?
Yeah. So I think a good precedent for this is some of the commodities. So like gold. Gold is the classic case, right? It used to be that to buy gold was a pain. I mean, you could buy mutual funds that held gold mining stocks, but if you wanted to own actual gold, you either had to, contract with a private vaulting service, or you had to go buy the bullion or buy the coins and store them yourself, right? Or put them in the bank in a safe deposit box. The ETF created a structure whereby there is gold held in vaults, like underground in London, for example, is a major location for gold storage. And then you have this fund structure that is a claim on that gold. That's the gold ETF. And that product has been hugely successful, even more so, recently since the money printer's been going brrr.
Brr.
But the idea for Bitcoin is, if we have one for gold, we have one for copper and we have one for oil and various other commodities, why not Bitcoin? And I actually think that is coming. I think there's a couple interesting scenarios to think about with MicroStrategy. One thing that's done generally in corporate finance is this concept of a tax-free spin-off. So you can have a company, maybe it has, let's say, 2 or 3 divisions or 2 or 3 businesses held under the same holding structure, and the holding company trades publicly. If the company wants to divest, wants to get rid of one of those businesses or one of those assets, they can sell it outright, but often that results in capital gains tax at the corporate level. This other way to manage it is do a tax-free spinoff. And basically, you got the existing stock. It says, okay, this asset, this business or company or whatever that we don't want, we spin it off as its own ticker. It'll trade on the stock market, and there's no tax effect for that. Now, it's not obvious to me why that couldn't happen with MicroStrategy at some point, where you've got the cash flowing software services, business intelligence business. And at some point, you've got enough Bitcoin, right, on the balance sheet that he just spins off the Bitcoin piece. He personally and all shareholders will own their, their equal shares, their pro rata shares of both those entities. And I don't know, now you've got a business that's just a holding company for Bitcoin. Would the, would the SEC object to that? I don't know. We might find out.
Well, so that's on my list of questions because it feels like, so the company that's been kind of raised here is Rentec, right? They forex their position before. Was it before the announcement?
I'm not sure. Actually, I haven't been following Rentec.
So they forex their position, but whether it's them or somebody else, it clearly looks like somebody wanted this deal to happen. This is a way for them to get exposure to Bitcoin via MicroStrategy's share price.
Yeah. And I think the way to think about what's going on with these Bitcoin proxy companies, because MicroStrategy is not the only one, right? You go to bitcointreasuries.org, NBK's website, and you can see most of these things are quote unquote crypto companies, right? Not that many of them are just focused on Bitcoin, but they do have Bitcoin on their balance sheets, and they are in businesses, let's say, that involve Bitcoin. And these stocks have been going bananas, right? I mean, sure, Bitcoin, has gone from 12K, to 18K recently, but these stocks have gone, a lot of them have doubled or more. And so it's apparent that somebody in the market wants or needs Bitcoin exposure and hasn't got set up yet to buy Bitcoin directly. Maybe they haven't done the legal work, haven't done the accounting work, they haven't done their due diligence yet on the Bitcoin custodians and exchanges that can basically get them the exposure. That takes, as Michael Saylor indicated, a period of months. And so in the meantime, they're saying as a placeholder, I got to buy me a basket of these proxies. I think MicroStrategy is one of those, but it's not, it's not the only one. And what companies are doing, MicroStrategy's smart about this too, because the stock went parabolic basically. I can't remember if it was last Thursday or Friday. And what happens with companies is anytime the stock gets too expensive, management says, oh, we'll just dilute you. We'll issue equity, right? Like, you want to buy my stock at 3 times the price that it was trading a couple months ago? Okay, I'll supply more, right? I will increase the supply of my stock, which in effect is what a convertible bond deal is. I mean, it's part debt, part stock. But yeah, there's an old saying in finance, which is when the ducks quack, feed them, right? When the ducks want something, supply more. Bitcoin is this asset that has limited supply, but a stock or equity claim on Bitcoin does not have unlimited supply.
Yeah, so what happens to the business intelligence business when they end up sat on, I don't know, imagine they end up sat on like $30-40 billion of Bitcoin. Like, where's the incentive?
Yeah, what happens there? I mean, for the company, it's like I say, I'm of two minds on this. Some shareholders will raise hackles. They'll say, why? They'll ask the question that I think it was Melissa Lee on CNBC asked Michael Saylor last week, which is, are you a Bitcoin company or are you a business intelligence, software company? And one can be both, but activist shareholders don't really like it when you're two of something. I would say that if and when Bitcoin, let's say, reaches its potential, we can talk about how to define that. But when it's basically a more established store of value monetary asset, then it'll be normal to have it on the balance sheet. In the intervening time, I think most investors, most analysts, most portfolio managers who run large portfolios of stocks are going to say, these are really two different things. I'd rather you split them up, right? I definitely anticipate some activist investors going to get involved and say, look, this is two different things. Split them up, because some people just want to own the software business. Some people want to own the Bitcoin exposure. I'm not saying that'll necessarily happen with MicroStrategy itself, but it's going to happen with some of these companies that have it on the balance sheet. Now, the question of what does the world look like when a company that used to have $1 billion balance sheet now has 10 billion or 50 billion, as you suggested. Yeah, I mean, talk about purchasing power. if you're a smaller or medium sized business within whatever industry you're in, and now you have a much larger balance sheet, maybe you buy your competitors, maybe you fund new products faster than you would have otherwise. You invest in your business, make yourself more competitive. I mean, it's very possible that these businesses that have these enhanced balance sheets from gains on Bitcoin are going to be much more formidable competitors than they had been prior.
Well, I guess also you can borrow, you can increase your debt against that position as well.
Yes. And this will be really interesting too. I agree. It'll be interesting to see how the corporate bond market treats this asset.
Mm-hmm.
I think ultimately we will see lenders saying, okay, yes, this Bitcoin asset clearly has value. It's been going up. However, I'm a lender, so I don't participate in the upside, unless it's a convertible bond structure. I only have to worry about the downside. So how much am I going to lend against this asset? What's going to be the loan to value? And that's a standard calculation with any debt market. I mean, it's the same with your house and your mortgage, right? With a house where you're pretty sure that the value is not going to go down too much, maybe you lend 80%, of the value. I think with Bitcoin, which is less volatile than it used to be, but still pretty volatile, the loan to value is going to be much lower. We're seeing that right now in the personal loan space.
It's like 50%, isn't it? Like BlockFi and do like 50% LTV.
Exactly.
But does that also? I was going to say, I wonder if therefore that means they will take custody of the Bitcoin to issue the loan the way the likes of BlockFi do.
Yeah, it's an interesting question. I think you could see two potential structures. One is what you described, which is basically that the lender has right to liquidate. I think more likely in the corporate market, you're not going to see that. You're going to say lenders, or you're going to say companies just say, look, we're in control of the keys. Pick the loan to value that you're comfortable with, and maybe it's lower. Maybe it's not 50%, maybe it's 20% or 30%. I think that's more likely the way it goes. But on the other hand, who knows? Maybe we'll see both structures in the market. That would be interesting.
Yeah. Well, the other thing is, I'm like wondering what this is doing to other companies. Like, there've got to be a lot of companies looking in and seeing this and thinking, we need to be getting in on this. It's got to be.
And some people have made statements, right? Like Jeff Booth has outright said, I'm on a bunch of boards and people are talking about it. Now, they may be more likely to be talking about it because Jeff Booth understands Bitcoin and has for a long time and has, been whispering in their ear for a while. But yeah, whatever the reported number of board level discussions that are going on right now, that the actual number is some multiple of that. It's unknowable what that is, but yeah, there's some percentage of companies that are thinking about this. And then you start to think of, well, what's the scale of the bid under Bitcoin that's needed to support it? Because MicroStrategy itself, is buying, 2% of the, the 900 Bitcoins that are getting minted every day, let's say roughly. How many more companies do you need to start sucking up, the entire flow, the entire supply? Plus you've got, the retail coming in via PayPal, via Square, and the Bitcoin Trust continuing to hoover up more supply. Makes you think could be interesting next year.
What we're really seeing right now is it's like the early stages of the FOMO from 2017, yet it's being driven by billionaires, companies, and hedge funds.
Yeah, it's I'm excited for it, and I'm also sad about it, because when you think about the retail wave and you think about this is the one asset in modern history where average people have had a shot at it, before companies and before hedge funds and before billionaires and corporates, that window may be ending, right? This may be the end of the cheap corn for your average pleb, unfortunately, and that's a shame. But that may be where we are. This cycle has so far surprised me in how corporate driven it has been. It'll be a mix, but yeah, this is. I hope it's not, but it may be the last bite at the apple for the average Bitcoin buyer.
Well, you say that. Do you know what? And I'm usually a pretty sympathetic person, but I've done over the last 2 years. I've done a number of panels at conferences. It's usually like the path to mass adoption, or what do we need for mass adoption? And I've for the last year, I keep saying we have mass awareness. Like, I don't go anywhere now, Andy. When people say to you, "Oh, what do you do?" So you say, "Oh, I wrote a book. It's a book about Bitcoin." How often do people go, "What's Bitcoin?"
Yeah, not anymore. That has changed completely, and it's even changed in the last couple months.
Well, I would say, when people say, I've got a podcast, and they're like, "What's it about?" And I say, "It's about Bitcoin." I never get what's Bitcoin. I don't understand Bitcoin, right? But we have mass awareness. Like, everyone's had the chance now to research it and look into it. Some people discovered it earlier. Some people got it earlier. I discovered it in 2013, and all I did was spend some money on the Silk Road, and I didn't probably get it until 17, and I would say it's only like this year, like this last year, I truly get it enough to think I wish I'd put everything I owned into it, right? Other people have got it earlier, but yeah, I think most people have had their chance now. It is what it is. It's a free-for-all, and you're rewarded by your risk appetite, and some people it's too, like Ray Dalio is going to pay a lot more than he could have, because he's put it off for so long. So for me, it's just like, okay, it is what it is. I think a lot of people may have missed out on the opportunity to buy cheap Bitcoin or relatively cheap Bitcoin and profit from it. But this may accelerate the move to a Bitcoin-based society, which could be, might not be, could be better for everyone. But that we don't know. The hyper-Bitcoinization, it's to be seen if that happens, the impact on people. But I just think everyone's had their chance now. Now's the race.
I've got a few thoughts there. One is, why do I Bitcoin? Obviously, it's an investment opportunity, but it's also what you described, which is, I'm in the same camp as the Austrians. I'm in the same camp as Breedlove. The world will be better on a Bitcoin standard, and that will accrue value to everyone. And so it's incremental, whether you get in sooner or later, and whether you make a multiple on your investment. And I'm not saying that, I say that, this is the last chance at cheap Bitcoin. I'm also of the view that the Matt Odell view, like it pumps forever. I think it will, or at least for a very long time, it'll go up. And I think there'll continue to be cycles. I'm not too worried in quotation marks, about hyper Bitcoinization in this cycle. Is there some probability that happens? Sure. I think it's somewhat low, but a couple cycles away, or 3 cycles, much more likely. And yeah, you're never too late. And I'm still tugging on people's sleeves, right? I still send emails, to folks saying, look, the reason that I've been a pain in your ass talking about this for the last few years is because it's still cheap. Now, we're basically at the all-time high or near it. It's not too late. There's still a multiple ahead. All expectations are for a repeat of the halving, bull cycle, the post-halving bull cycle. And so I'm not saying it's too late. I'm just saying that the really stupid cheap Bitcoin, may be behind us. Now it's, cheaper, still cheap, but not crazy cheap. So don't wait. You mentioned. Go ahead.
Go on. No, you go.
No, I was going to say, you mentioned, conferences and stuff. So I gave a talk yesterday to the CFA Society of Columbus. CFA, is this professional designation, and it's no joke. I mean, it's 3 years of exams. It's pretty hard. The average pass rate, all the way through is under 10%. Most people fail at least one level going through. And these folks are, I think, finally interested, finally paying attention. They had a shot, they saw it in 2017. They called it a bubble. 90% of them probably ignored it. A few figured it out. But I think now, at this point, the smart money, the legacy finance, the guys that were born on the dark side of legacy finance like me are finally starting to pay attention. And I'll be really surprised if we don't see a lot more legacy finance people not only buying it either for themselves, for their funds, for their firms, but also making the career jump, right? Realizing that this this is the future of finance. This is where the action is. The legacy banking system and financial system is in, slow and painful terminal decline. And I'd rather get out of that. That's not where I want to be for the next 10 or 20 years of my career.
Do you remember when you first discovered Bitcoin? Or heard about it?
So I got the usual 3-touch story. First, 2013, I was on vacation in Eastern Europe, and I had The Economist magazine in audio format, right, podcast format, listening to The Economist, driving from, I think it was Czech Republic to Hungary, like on this little, dusty road in the middle of the Hungarian countryside. And there was an article about Bitcoin, and I totally missed it, but I definitely remember that moment. The second exposure was 2016. It was actually Ethereum. There was an article, I think, in the Wall Street Journal about the DAO hack, the hard fork. And then it wasn't until 2017 when I got an email from a friend, I think it was Arun Rao, who had forwarded me info from a friend of his. I think it was Ari Paul, actually, who had been pinging people about, crypto. And he's like, hey, look, this guy's running a crypto-focused hedge fund. And I was like, what? Like, what is that? There's whole funds, dedicated to this stuff. And so that's when I really started paying attention. That was like second quarter 2017.
Yeah. So everyone has that kind of 3-touch thing, which is really interesting.
Exactly.
I don't remember my first one, but I used to work in like digital, building websites and SEO. And I can't even tell you when I heard about it first, but I knew I'd heard about it at some point. And then I had like the Silk Road 2013 and then 2017 for me. But I would even say, even though I discovered it in 2006, what was it? End of 16 when I was like, I had to buy again. Yeah, early 17. I still would say now I've been like headlong into this by doing a podcast. It's genuinely only the last year or so I've really started to click with me. But in some ways, even the last 3 or 4 months, a lot of things have fallen into place where I'm like, okay, I get it because of that. Okay, I get it. That makes sense. Like, really started to click for me. So we've got these kind of billionaires hedge funds. I think they're at that stage where they're like, shit, I need to get some of this because it's going to make some money. And they're probably going through the learning phase right now, allocating, what is it? Jack Dorsey allocated, was it 50 million? I bet he was thinking, shit, we should have done a lot more. And I think a lot of that's going to happen.
Yeah, that's it. You're spot on. I mean, I still am learning, every day, as you suggested. The obvious framework here, there's going to be a lot of people who talk about, the pandemic and digitization of everything, and all of us spending our time, staring at our screens, talking through tubes on the internet. That was the catalyst for me. That's when I got the digital money, was the thing. However, as we know, a year ago, when I published my book, all the factors that really drive Bitcoin were really already in place, right? There was too much debt. It was clear that the debt was going to have to be monetized. It was clear that governments were, sort of already running big deficits, and that was just not going to end well. We were in the later stages of the 80-year long-term debt cycle, and so it was already going to happen. But I think what you said, which is a lot of people who had been ignoring it will say, oh, for me, the pandemic was the catalyst. That's what started me doing my homework. And yeah, that's fine. Different people pay attention at different times. A guy like Saylor, it's interesting. There's the classic tweet, right? It was 2013, right? When he downplayed it. Yeah, somebody dug that up. Some diligent cyber hornet dug up that old tweet. And so he at least had that exposure. So I don't know if it was his second or third when he jumped down the rabbit hole. He moved quickly. It only took him a few months. Now, considering his background, it's not surprising because he's a very smart guy, right? He got into MIT on merit, was an aeronautical engineering major, what most of us call rocket science. Was running a $1 billion capital expenditure program for a big chemical company at the age of, 22 or something. And then he's been in software for a couple decades. He already understood the scarcity value of digital assets, right? Because he's speculated and made money on domain names in the past. And then he wrote this book, The Mobile Wave. By the way, I just read it. It's really good. He published it in 2012. He does two things. He talks about some history of science and history of technology, and the groundbreaking, things like the printing press, et cetera, et cetera. But then he makes specific predictions about the future. Again, this is from where he was sitting in 2012. A lot of those predictions have come to pass. And when he talks about how he made these big investments in the internet giants, I can't remember which ones he said he bought, but he bought the stocks of, I don't know, Facebook, Google, Amazon, maybe Microsoft back in 2012, and made a multiple because those stocks have done really well in the last 8 years. He understood network effects at this point. I think what's also interesting about his personal history is he was a child of the internet bubble, right, in the early 2000s. And I was talking with Bitcoin Tina about this, and a lot of people got rich and then got ruined. MicroStrategy had, I don't know, crazy multi-billion-dollar valuation at one point there. And then it all crashed. And then he saw what was going on with these network effect-based companies, and he bought the stocks. But he didn't get filthy stinking rich. I mean, don't get me wrong, he's plenty rich, right? He's a multi-$100 million guy. Now he may be, a $1 billion guy with the pump from Bitcoin. But he wasn't, Mark Zuckerberg rich, or Sergey Brin rich, or Jeff Bezos rich. And so I think for him, this is his bite at the apple. This is his shot.
That's what I mean.
This is his shot to make it really huge, to make it, deca billionaire status.
Yeah, this is what I mean. Like, this is why I said the moonshot, because it's like he's rich enough. Like, he's at that stage whereby, like, he can buy anything he pretty much wants, right? But, like, this is the moonshot to, like, absolutely go and make that, like, top 100, maybe top 10, like, richest people, whatever. I don't know. There might be some Bitcoiners already hold enough that he can't exceed that. But he could still be a top 100, top 50 richest guy. And also, just, like, somebody who actually educated and showed people the way about what you could do with this. I think I find it fascinating what he's doing. And I sit back... It's part intrigue, a little bit of intrigue, see what's going on, but also like in awe of it at some point. I think there's a big lens on him now, though, like, which is quite interesting. And I feel like we're obviously talking about him, so if he hears this, hi Michael. But there's a lens on him now, so
there's going to be pushback, right? Like, I think it was Citigroup downgraded his stock, last week. And they talked about how, he's not as focused on the core business. He's spending all his time on Bitcoin. And, there's some truth to that. I mean, one does have to spend a certain number of hours to crank out, that many podcasts and, all the conference appearances, et cetera.
Well, in his defense, right, 30 million a year profit. He just made, 12 years profit in 3 months?
Look, I'm not saying he's doing the wrong thing. What I'm saying is there are some investors out there who have yet to do the homework on Bitcoin, who haven't figured it out, or skeptics. Like, they'll always be perma skeptics, perma bears. We know and love them in the Bitcoin space, although some have been hedging they've been changing their statements a little bit. I loved when Neil Ferguson, in his op-ed on Bloomberg a couple weeks ago, called out his quote unquote his good friend Nouriel Roubini, right, who's basically had to eat his words. He called it the greatest conversion since St. Paul or something. from no coiner to maybe there's something there. Like, maybe it's kind of sort of a store of value.
Wow, there's a few
they'll always be
conversions.
naysayers.
It's when Peter Schiff turns around and says, "I got it wrong." Although I got a feeling, like, people have been saying, I wonder if he's just sat there on a big pile of Bitcoin. He's trying to get as much as he can, and when it flies out, he's going to go, "Yeah, look, I had you all. I was holding it." But Ray Dalio was another interesting one, and what I thought he did that was really interesting. Yeah, he came out with a tweet and said, "You know what? I could be wrong. I want to understand this." And he's clearly gone out and done it. He's clearly, if he hasn't taken a position yet, he clearly is about to take a position. And that's a really interesting conversion. So the thing I'm really interested to watch is that, look, I understand the value of scarcity, but what's going to be really interesting is that what actually happens when there's a supply shock, when there's so many people coming at this, essentially 900 a day, and anyone else who's willing to sell. Like, how mad does this actually go? Because it really could go kind of like crazy bananas here.
Yeah. So my expectation, and by the way, every month or so, I jokingly tweet that I've checked my Bitcoin inventory and none are for sale, right? There's plenty like me who are strong-handed hodlers, and we have ideas in our minds where we'll peel some off, right? Maybe it's six-figure, somewhere in the six figures. But basically we're not selling between, here and 100K. So, along those lines. It's different for different people, but that's the basic idea. And then you've got the new investors who are like, well, I came into this because I want to make a multiple. So, I'm going to make my multiple, or I'm going to see this out. I think you've said that you're holding for at least a couple more halvings, or maybe 3 halvings. I can't remember.
3 halvings. Yeah, I said 3 halvings. I tell you why. For a couple of reasons. I'll tell you my investment thesis. So when somebody says to me, like, at what point are you selling? Like, during the next cycle, what point are you selling? I'm like, how are you meant to know? Like, if it goes to 50K and you sell and then it goes to 100K, you're going to be like, oh, I wish I'd held. You sell 100K and it goes to 300. I don't know where the top of the market is in this cycle. So I'm like, why am I going to try and play one cycle when I know I don't need the money now? This is essentially my retirement fund, right? Like, I'm going to play 3 halvings. I've been through one. I'm going to go through this one, and I'm going to go through the next one. Look, I'd maybe sell a small amount here. I might go, do you know what? Let's go and have a nice holiday, kids. Or I might finally get myself a Lamborghini. But, like, strictly speaking, I don't need the money. Like, it's not going to change my life materially. I have what I need. Me and the kids have what we need. But I'm going to ride this one out. So, yeah, three halvings for me. I'm through one. I've got, like, 9 years of my thesis to go.
And this is where you get, to your original question, how crazy could this get? How far could this bull market go? And there's 2 pieces to that. One is, how hard are the hodlers hodling? And then the other piece of that is how much capital is flowing in. And of course, with every 4-year cycle, your orders of magnitude larger market cap. So obviously it takes a hell of a lot more money flowing in, to move from 300 billion to a couple trillion than it did, to get to 300 billion from the prior, high water mark. So, the analysis that I've seen, which I think makes some sense, is people talk about how many incremental dollars are needed to result in price and market cap going up. And I would say the general consensus is, it's between 5 to 10x or something price move per dollar in. I mean, it depends basically on how hard people are holding. If nobody wants to sell, then price goes up infinitely, as money flows in. But as a practical matter, people sell at different prices, facts and circumstances change, there's news events. So, but I do think that, it's probably, let's say to get to 2 trillion, okay, 100K Bitcoin roughly, then that's an incremental, 1.6 trillion or 1.7 trillion from where we are here. So how much capital has to flow in? Maybe a couple hundred billion. And a couple hundred billion is a couple hundred billion. It's not a small amount of money, but in the scale of global capital markets, right, it's not that much money. I mean, stock markets globally are tens of trillions of dollars. So are bond markets. I mean, there's at least 100 trillion of investable, movable, liquid capital that can, sell and flow into Bitcoin. And then, of course, there's the potential demonetization of the much larger asset classes like real estate, which is hundreds of trillions globally. I mean, yeah, so it could get wild. I mean, 6K, 6-figure, Bitcoin. Very, that's kind of my base case, to be honest, and probably overshoot that. Does it overshoot to 1 million? I think that's kind of unlikely, but multi-$100,000 Bitcoin, at least for a moment, in the blow-off top like we had at 20K last time in 2017, very possible. Very possible.
Well, there's a lot of people ranging between 2 and 300,000 now. There's a lot of people I've spoken to ranging between now and then. I mean, I don't know what the blow off would be like. I don't know how much liquidity comes in the market. I don't know how much interest there is then. But what I read the Pierre Rochard article, The Speculative Attack on Nakamoto Institute, and actually there could be a significant amount of inflow from people just wanting to exit their currencies. Like I'm not holding a lot of pounds right now. I used to hold a certain amount of savings, and also on my podcast is a business on the balance sheet. I'm not now. I am holding very, very low amount because there was always that thing. It's like money flows to the best currency. And it's like Bitcoin is, and I kind of would repeat it and kind of agree with people. Like I get it now. Like I really understand it is, and I'm over the volatility issue. Like if we're in a bear market, it's slightly different. But I'm kind of over that issue now. So that's going to be really interesting to see what happens. And when you say like 200 billion, well, Michael Saylor's done 0.5% of that already. And MicroStrategy is a successful business, but there's a lot of bigger businesses. I mean, just look if someone like Apple went, hold on a second. We're sat on $200 billion melting ice cube.
Yep. And what you mentioned before about, people flowing out of other weaker currencies, I agree with that completely. And that's it's part of the beauty of how this could play out, which is the stablecoin angle, the basically the stablecoin USD. People, it won't be the dollar, that gets totally wrecked first, right? The dollar will be probably last to go. I mean, I happen personally to be bearish on the dollar for like the next year, but I'm not talking about like, hyperinflation or anything like that. I'm talking about like, the dollar, the DXY index could go down by, 10 percentage points or something. Like it could go from 90 to 80. That's very possible.
Right.
That's not a disaster by any stretch. But some of these weaker currencies, for sure, people that have phones that can access their crypto wallets, are going to be like, oh, okay, well, Bitcoin has some upside, but also, I can buy this stable coin. As we know, there are several. And that'll that'll give me protection against short-term volatility, in addition to my protection against long-term volatility that may come from Bitcoin. And so, I see incremental demand. I see an incremental bid for dollars over the next couple years, which will be very supportive, I think. While yes, some of those really weak currencies could suffer, and those are the countries, of course, where you may first see real significant attempts at clamping down on, crypto in general, whether it's Bitcoin or not. And it'd be more probably on the wallets, because the local government will see, oh my God, my currency was depreciating 10% a year, and now I'm on 40% a year. It looks like Argentina during one of its many depreciations. And so I got to take some action to try to stop people from doing this. Ultimately, that probably won't succeed, but there'll be plenty of headlines. Well, there'll be plenty of headlines for us to read, over the next couple of years as this plays out.
Yeah, that wallet to wallet KYC thing. I was thinking about that. I was thinking, what's going on here? What is the interest here? Because the French are looking to do it as well. Is this about trying to track nefarious characters and criminals and terrorists, or is this about knowing where the money is? Because at some point, if they're not getting the tax returns that they need, or if they're not, if their own currency is failing, do they need Bitcoin? And wouldn't it be a fascinating scenario where the government's like, shit, we need this Bitcoin. They need it themselves, so they want.
Well, there's still the minority view. I think it was Raoul Paul a while ago who said, he thinks it's NSA or CIA or at some point he stated that he thought it was some government agency that was Satoshi, basically, right, that had launched it. I think that's possible, but unlikely, pretty unlikely. And of course, for me, the obvious move, and I think that seems to be how it's playing out so far, what we're seeing so far, is mining, right? In other words, governments, let's say, fostering, but also tightly monitoring and or controlling mining operations within their borders are sort of the obvious way, I think, to accumulate Bitcoin, not least because those are, clean coins. Those are relatively anonymous. it's different than, I don't know, the government of XYZ country opening an account with, BitGo or Gemini or whoever else, to both accumulate and custody Bitcoin. And moreover, those professional custodians are mostly Western country, domiciled. So yeah, if you're a country and you want to accumulate Bitcoin, it seems like the best way to do it is get some mining rigs set up, tax at the appropriate rate, and accumulate with less visibility there, and yeah, hold your keys at the government level.
It's just funny if the government realize, crap, this is a good asset. I mean, look, Venezuelan government have realized this. They've realized it's a good asset, but it's whether other, like the US government thinks, we need some of this, and then it's kind of admitting that scenario. Go on.
No, I was going to say, and this is the story. I mean, this is the narrative that all Bitcoiners, we need to promulgate, we need to support, which is, the proximate story is, rogue nations like Bitcoin, and that's bad. But the real story is, if regulations hadn't been changed appropriately, then, as you know, running a website in the United States 30 years ago would have required that you get a license from the FCC, right? And the internet never would have taken off in this country. And all these giant internet companies, like them or love them, they've generated huge wealth for the United States, and they'd all be European right now. Some of them might be British, honestly. And so, fortunately for Americans, right? Fortunately for us on this side of the pond, our government didn't screw that up. They allowed innovation, and it's pretty evident, I think, to me and anyone who does the homework, that this is going to be a hugely innovative and value-creating space. We need to not screw this up in the West, not only in America, but ditto Europe. I mean, Europe's got a second bite at the apple here in terms of, the wealth creation of the internet, right? Like, hey, I'm generalizing, right? Like, there's a precious few European, software and internet giant companies, but really, Europe and the UK have a shot at, they've got another bite at the apple here. They could get this right. They could allow innovation and growth of Bitcoin, in their countries, and that's a competitive advantage.
No, I agree. I do want to get back to the MicroStrategy thing, just because you put something else out. You put out that tweet where you said you think there's more room on the balance sheet for them to borrow more. So you said they could terminate leases and work from home, issue 10-year bonds at low rates, use proceeds to buy Bitcoin, stock go up, return to step 2, clockwise rightwards and leftwards, open circle arrows. They got the cheat code.
Yeah, exactly.
Right? They got the cheat code.
The cycle.
So what is it you're actually saying here?
Yeah, I mean, I put that out in September. It was about right around the same time I had that conversation with Preston Pish on Swan Signal, and yeah, he's doing it. I mean, whether it's in the form of outright debt or whether it's equity, right, issuing stock, or it's the hybrid. That's this recent convertible bond deal where he announced 400, upsized to 550, and has an option to add 100 million, to 650 if investors want to buy it. And what we saw in the first cycle was he announced a new treasury policy. This is back in August, and then did also the tender offer to take out shareholders who didn't want to come along, and then bought more Bitcoin, and the stock went up a lot. So the first cycle has sort of played out, right? And so he's doing what any wise CEO, shareholder CEO would do, which is, oh, this seems to be working. Let's do some more of this. And that's the second cycle, borrow/issue to buy more Bitcoin. And we'll see kind of how the cycle plays out. I mean, I see an analogy to Grayscale, right, to the Bitcoin Trust, which is because it trades with this premium, right? Premium to net asset value, $1, you got to pay $1.30 for $1 worth of Bitcoin if you're just buying it in your brokerage account. That sucks in new money to invest at net asset value, which is locked up for 6 months, which then exits at the premium. And it's hoovering up this capital in this sort of feedback loop. And so, yeah, I see two major self-fulfilling feedback loops sucking in capital and Bitcoin in the market today. One is MicroStrategy and one is Grayscale. And Grayscale is bigger and is ahead, but MicroStrategy so far is doing its best to catch up.
Is there any risk with MicroStrategy if they did keep doing this loop? Is there anything that becomes partly Ponzi about it, in that they need the latest round to, the price to go up for them to be able to pay off the previous loans? Because in the end, like, if they did this a few times and it ends up being like, not 550 million, it ends up becoming a couple of billion. Yet the analytics business isn't big enough to borrow against. Is there any risk there that it becomes a little bit Ponzi?
Yeah, of course there is. And what's interesting is there's no bright line, right? I could say the same of the commercial property market, for example, right?
Yeah.
Real estate investment trust, REITs. Okay, there is no more indebted asset class in the world, right, than property. I mean, these are companies that borrow 80% plus of the purchase price of the property that they buy, and the price has gone up and up, so they borrowed more and more as they acquire properties. Then you have the shock, right, from the pandemic, and these stocks get absolutely murdered, right? Some of them are down 80%, and some of them will be zeros. I mean, we'll see. We won't know until we figure out how much of the shift to work from home is permanent versus temporary. But that's a case where the price of the asset, which had a bunch of debt against it in a public markets, investment vehicle, has blown up. And so, yeah, could the same thing happen with Bitcoin? Of course it could. Bitcoin goes down by 80% on a regular basis. I'm not saying that it necessarily will this time, but honestly, that could be one of the mechanisms that feeds the extreme price movement that you were, hypothesizing earlier, which is like, how far could this go? And the answer is, well, quite far when you include capital markets and you include money flowing in, and in particular when you include debt flowing in. One of the classic hallmarks of almost all bubbles, investment bubbles, is there's a big debt factor, right? There's a lot of people borrowing. Now, I think it's better that he's using equity, rather than debt, or I think it's better that he's using convertible debt rather than pure debt. Nevertheless, there is some level at which one would be concerned about this. Now, the counter argument would be, but if Bitcoin does what we think it's going to do, it's likely to be multiples higher. He'll easily be able to pay off the debt. And my guess is that he understands the 4-year cycle. So my guess is that he de-levers the balance sheet at whatever, 50K Bitcoin, 100K Bitcoin, whatever the number is. He starts to back off the debt. He starts to pay some of it down. We'll see how it plays out.
God, it's so fascinating, isn't it? It's like next 18 months could be absolutely wild. I feel like there's a lot of companies now getting ready to go. What's the kind of like, from your experience, what's the kind of like lead time to be able to start making serious investments? But people have heard about MicroStrategy. They're not going to immediately the next week say, okay, let's buy a bunch of Bitcoin. What do you feel like the lead time is? And what are the hurdles that these companies have to go through and can think about?
Yeah, I think Saylor is right because A, he just did it, and B, he's talked about it. I can't remember if he talked about it on your show, but he talked about it on someone's show. And it's, first is like legal, right? Talk to the lawyers in-house and outside counsel. Like, do we have the ability to do this? Is this going to run us afoul of the SEC, which is the regulator in the US? And then the second is, okay, how does the accounting work? Like, do we understand how to account for it? He's talked about this. I think Square actually published materials on this, right? Jack Dorsey published materials on how they went about it. You've got to get, your CFO and your treasurer on board because they're the ones who are going to actually execute the thing. You have to do your due diligence and then on board with a professional custodian, right? Like, you got to decide who am I going to hire? Am I going to hire Paxos, or am I going to hire BitGo or Coinbase or Gemini or Kingdom Trust, or which of these various qualified custodians am I going to use to actually hold the stuff, and then which exchange am I going to use to accumulate it, or which OTC desk or group of desks, et cetera, et cetera. So yeah, there's all those steps. I think he said that it took a few months. Maybe you said it was like 6 weeks. I can't remember if it was like 6 weeks to 2 or 3 months. And I'm sure he did it in in an expedited fashion. He was primed to understand Bitcoin, and once he grokked Bitcoin, I'm sure he wanted to move as quickly as possible. So other companies will probably be slower, I suppose. Some of them, are doing year-end work. They're closing the books on 2020. They're saying, this is 2021 business. I'll think about this in January. So yeah, we'll see. I think the fastest someone could follow is a few months. A company like Square, obviously, which already had Bitcoin in inventory because they were already selling it. It's easier for them to get it going. Somebody who's not already in the Bitcoin business, not already holding it, it's going to take them a little longer.
Do you think with these companies, they're looking at this now and getting their own kind of like, FOMO feeling that crap, we need to do this quick because the price is at 19? Or a lot of these companies, do you think they're looking to go, it doesn't matter if we do it in 3 months, doesn't matter if it goes to 30, this is a long-term investment? Or do companies get their own kind of FOMO?
I think it's a range, and I think it depends. By the way, I just want to state, I don't have a list of, known companies that I know are in the process of doing this. This is speculation, right?
I do.
I think if I were to say, okay, you do have a known list of companies? Public companies?
I know some. I know of some.
Yeah.
Shouldn't really say.
So I think it's a range, and and what factors is it going to depend on? Okay. Number one, it's going to depend on how familiar management and the board are with Bitcoin. That's number one. Like, how much learning do they have to do, right? How many What Bitcoin Did episodes do they need to listen to get up to scale or up to speed? Okay. Second is, are they already set up? Like, are they already a financial company? Do they have some, hook into the system already that they basically can get up and moving? Another is, how much risk are they willing to take with shareholders? So
yeah,
if you have a really successful business, which is already at a very high valuation, right? If you're a software as a service company that's trading at 30 times revenue, okay, maybe you don't want to upset the apple cart, right? Because your valuation is already so high that you have apparently very bullish, high conviction investor base that is saying, we really like what you're doing and don't screw it up. And they don't really want to risk, 20% or 40% of the shareholder base saying, oh, we don't like this move, like we're going to dump the stock. So I think it's actually the less successful companies, relatively speaking, companies that are, down on their luck. I mean, it's a little bit the story of the last, bubble of the 2017 cycle, where you had, what was it, Long Island blockchain or whatever. And you had companies that had crappy businesses. They weren't doing that well. They're like, let's pivot to this, to this thing. So I think it'll be more of that on average. It'll be the dicier, sketchier companies on average, if I had to guess. So yeah, those are some of the factors that I would say, if I was just randomly, sampling companies out of the hat, which are more likely to make this move.
Well, listen, man, it's been really fascinating. We've got to do this other show as well. I think we're going to do it in January. Like, how pumped are you then? How are you feeling, just generally?
Peter, Bitcoin is the most fascinating thing I've ever seen in my life so far. I'm 39. I've been an investor, my whole career. This is obviously the biggest asymmetric trade, investment opportunity I've ever seen in my life. Otherwise I wouldn't have gone to the trouble of writing a whole book about it. And I'm excited to see, after a long, painful, grinding bear market. Not that this one was any more long and painful than the prior one, but I wasn't in the prior one, so this one I got to feel firsthand. It feels really good to finally see the thesis, starting to play out. It feels really good, starting to hear responses from people that I've been pestering, about for years now. And yeah, I mean, I couldn't be more bullish.
Yeah,
I don't know what else. I don't know what else to say.
Yeah, so I mean, my first proper bear market, the last one didn't really count because I wasn't really properly in it. I had my doubts during it. Did I get this wrong? did I get this? Yeah, maybe this is screwed. Yeah, maybe no one will care. And I think you have to go through at least one. Next time I'll be like, okay, how long is this going to take?
That's right. You know what I also think helps, Peter, and I'm curious your view on this.
Go on.
For me, I think working on Bitcoin made the bear market easier, right? In other words, if I wasn't doing anything involved in the space, if I wasn't writing or podcasting or anything, then I think the time would have gone slower. I think that I would have just been watching the chart, watching it grind away, having a stiff drink every night. And not that it wasn't painful anyway, but I think that working in the space, attempting to be doing something productive, all the while learning more about it, actually made the bear market less painful. Was that your experience, or?
Yeah, but it was also different. So during the last bear market, so in 2013, when I was using Silk Road, I was also trading Bitcoin CFDs on plus 500, right? That was a bit of fun. The only annoying thing about that is you'd have an open position and they're always leveraged, and you go to bed and sometimes you wake up in the morning, it's like, shit, I've made $3,000, this is cool. And then another time you wake up in the morning and you've been wiped out because there was just a sudden liquidity, like a sudden drop in the price. You get stopped out and you're like, and it was just like an instant drop. So I made and lost a lot of money very quickly, like tens of thousands. I didn't lose in the end, but like I was up, but I wasn't as up as much as I could have been. And then I stopped doing it. The only time I ever owned the asset was actually when I was on using Silk Road. So what happened was, at the end of that, I stopped trading. I was like, this is too emotional. I remember one night specifically, like I lost thousands, and I was just like, this feels crap. I feel terrible. So I was like, I'm done. And my ex at the time said, yeah, you probably shouldn't do that. And I just forgot about it. I wasn't into the thesis of Bitcoin. I didn't know anything about it. And then what happened is, occasionally I'd like look at the price. It's like, shit, it's $800. Crap, is it 500? Oh, is it 300? Oh, this thing's screwed. Oh, it's gone back up a bit. Oh, it's gone up again. And so I just kind of followed that in the distance, but didn't really care. But because I work on it like you, I've got a lot of interest, and rather than looking from a distance and going, that thing's screwed, I spend a lot of time kind of building my conviction by speaking to like really smart people who understand Bitcoin. So yeah, I think you're right now. I feel like there's a bit more of an inevitability about it now, whereas before I was a bit kind of like, oh, is this going to work out? Is this really going to be all okay? Because I wasn't too sure. But yeah, I think you make an interesting point there.
Yeah, you build your conviction the more you learn, the more you work on it. I think that's been that helped me get through this bear market, personally, for sure. There's no doubt about it.
Yeah, man. Well, listen, this was great. Everything I wanted, hoped, and expected. And I'm really looking forward to doing our other show I think we're booked in for January, right?
Yeah, that's right. Me too.
I can see your book in the background, Why Buy Bitcoin. Listen, if you listen to this, go and buy his fucking book, man. Go and buy Andy's book, Why Buy Bitcoin. It's up on Amazon. How much is it?
Look, the ebook's only $10 and the paperback's $15.
Listen, go and buy that book. But I look forward to doing this again with you in January. We'll go into a lot of detail about what you covered in the book. We'll rip another show, and it'll be interesting just to reflect on this one. In about 3 or 4 weeks ago. Shit, where are we now?
Yeah, there's going to be so much news. I mean, it's just going to come like a fire hose. Look, this has been a blast, Peter. I really appreciate it. I look forward to that round 2 in January with you.
All right, brother. Well, listen, if I don't speak to you, well, have a great Christmas. I'm sure I will, but yeah, thanks for doing this.
Likewise. Merry Christmas to you. Thanks again. Talk soon.